Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's January 31st. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So I just booked my trip to the Super Bowl. I won't tell you how much I paid for everything, but I did get a really good deal. These tickets I got, which are pretty good seats, 15-yard line, 15th row, are selling for $1,200 more for what I paid for them. Not only that, I was able to go directly through the NFL to get one of their packages, so I have free drinks and food for 4 hours prior to the game. This place called the Armory, which is insane. So just opened up again. It's been around forever. I've read up on it. Great history. And Prince shot his 1999 video there, and Aerosmith shot one of their videos there, and it's pretty cool. I mean, exciting. It's a massive club setting. I think it's like 4,000 people or whatever, where Pink is performing on Friday. J-Lo is going to be there Saturday. So the whole package included is a really good deal. Of course, Super Bowl is still expensive. You guys know I'm a huge Eagles fan. Excited. And I literally booked this about 48 hours ago. So the flights were crazy, and I actually have to take 3 flights home from Minnesota. So, I mean, it was so crazy that when I was on Expedia booking this thing, every time I booked it, it said the flight was gone. And if we left on Friday, which we wanted to do, now we have to leave tomorrow. But if we left on Friday, the earliest flight is like 6:37 p.m. And it's going 2 or 3 different flights just to get there. So you'd get there like 3 in the morning on Saturday. It was crazy. So you almost have to leave Thursday. Because, again, we did this so late, and I'm sure everybody else was booking this stuff like 3, 4, 5 months ago. Which, by the way, it's going to be minus 8 degrees and snow on Saturday. So that should make things interesting since I have no winter clothes there. I live in Florida. And I'm leaving tomorrow. Now, most of you know I am a diehard Eagles fan. I'm very, very surprised they won the last 2 games without Wentz. They play at home. But Foles did play lights out against Minnesota. If you can play like that, we're going to have a chance. So I'm going to give you my prediction for Friday's podcast, right? That's frankly speaking. For new listeners, every year I give my Super Bowl prediction. I break down the game, tell you who's going to win with the spread. Tons of analysis because I'm a big football fan. It's been the best trade every year. It's a guarantee. I'm never wrong. At least for the last 8 years since I've been doing this. Because after I give you my analysis, after I break everything down, again, I'm going to do it on Friday's Frankly Speaking podcast. I'm going to tell you who's going to win the game with the spread. And my Super Bowl pick has been dead wrong for 8 years in a row. So the guaranteed trade, whatever team I pick, just do the opposite. Mortgage your house, sell your car, rent your kids to someone, just raise as much money as you can because it's a guarantee. I love using the word guarantee. It's like mentioning the words bomb or terrorist on a phone. It's like Homeland Security is going to knock on your door in like minutes. And the word guaranteed, the SEC usually comes knocking on your door. Probably take up a few weeks, though. So if you're the SEC and you're listening to this, I'm just making a joke about the guarantee. Although if you did the exact opposite of whatever team I was just betting in the Super Bowl, you would have won 8 years in a row. So it worked 100% of the time since I've been tracking this. But seriously, make sure you listen to Friday's podcast to get my Super Bowl prediction. Now, quick story before we get to fantastic interview. Yes, it's about Florida. Mini ran here. You're going to love it. I didn't love it. So I just booked this trip. I'm going with my wife and a friend. Works for me. Great guy. Huge Eagles fan. I'm getting the tickets FedEx to me because the person who sold me these tickets told me, don't think about going to World Call. You're going to be there 3 hours. I'll overnight them to you. So he overnight the tickets to me. Right? Today's Wednesday. This was yesterday. So I bought them on Monday, wired the money, and then wired the money. That's how you know how much it cost. Wire the money, all 3 tickets, and waiting for these tickets to come. So he overnights them to me. Supposed to get them delivered to my house at noon on Tuesday. So we have to sign for them. Now, I went home around 9 a.m. Tuesday. So my wife was busy, dropped off the kids. She had me to run a few errands. So I zipped home for like an hour. It's like 5 minutes away from my office because someone had to be home to sign for these tickets. So my wife gets back around 10:15. I'm like, okay, it's like, pretty close to 10:30. I'm like, all right, I got to go back to the office. And I said, you know what? Let me do something smart. I just know Florida. Let me do something smart. Right? I just have a feeling that maybe the guy just comes here, doesn't ring the bell, whatever. So I said, I got to write a note, right? A little sticky note. I'm going to put on my door, basically tell this guy to ring my bell. The note actually said, "Dear Mr. FedEx," I'm not kidding. "Dear Mr. FedEx, please ring the doorbell. We are home. Thanks." So I go to put the sticky note on the door, right? Again, my wife just came home like 10 minutes ago. And there's a FedEx sticker on my door saying that the guy came 10 minutes ago to deliver the tickets. In short, this idiot decided not to ring my bell, not to knock on the door to deliver the tickets. He just ran up, put a note on the door saying he tried to deliver it. And basically, he can't leave the package there or the envelope there because someone has to sign for it. There's 2 cars in my driveway. Okay. I also have 2 dogs that bark anytime someone knocks on the door. So I know you didn't knock. I know you didn't ring the bell. I definitely know you didn't ring the bell because I am basically in my kitchen, about 15 feet away from the door. My wife just walked in 5 minutes ago before the FedEx guy came to my door. Right. So again, 2 cars in the driveway. We're both home. This moron decides not to ring. He gets out of his truck, right? I have to sign for it. You get out of your truck. That's the hardest part in Florida, right? Getting out of something, even the mailman never gets out of his truck ever. If there's a car blocking your mailbox in my neighborhood, you'll get like 5 letters because the guy had to get out once. Doesn't matter if they're doing work on your house. Now, any step that they have to do to work, like 1 minute extra, it's like death to people in Florida. It's death. Oh my God, I gotta get out of you got out of the car. You did a great job. You got out of the truck. I'm so proud of you. You got out of the FedEx truck. You came to my door. You couldn't ring the doorbell. There's 2 cars in the driveway. I have to sign for this. You couldn't knock on the door. I mean, how lazy I'm not going to curse. How lazy can you be? I called FedEx. Called FedEx and said, hey, told them the whole story. And they're like, well, the guy has to come back. And so they're like, all right, we're sorry. We apologize. He's going to come back to deliver it. I'm thinking he's going to come back, whatever, a little while. 5 hours later. So our wife cannot leave the house because we had to sign for the package. And this is like 4:30 p.m. And finally, the guy comes here. Huge inconvenience since we have to have someone else pick up the kids from school, drop them off. Plus, my wife doesn't have winter clothes either. Again, we live in Florida, right? So she's going to run out, buy hats, scarves, gloves for us. Again, I'm not being a wuss here, but -8 degrees. I like to say I'm a tough guy. No, I'm wearing gloves. I'm wearing a scarf. I'm wearing a big, big Eagles hat over my ears. I'm going to stay -8. I don't care how tough you are. I don't care if you're in the UFC. I don't care. -8 degrees. So my wife went up signing for the package. I'm glad I wasn't home. I mean, I'm not going to say it. Forget it. But anyway, it was probably better if I would have been home because my wife actually went off for the guy, which I loved, and she should have, right? But I loved it because she gets that anger out, which is less anger that's going to be directed to me, probably sometime later in the day when I do something stupid. But man, come on. And how does the guy have a job? How can't you ring the bell? Knock on the door. Just run up and put a sticker on it saying, oh, we tried to deliver the package. I mean, seriously. I mean, anything these people could do to work, it's just amazing. It's amazing. I keep ranting about this. I know I'm supposed to understand. I should get it by now. I just don't, and it's frustrating as hell. But I do have my tickets in hand. Now, real quick, I wanted to say thank you to all my subscribers out there who reached out for me from Minnesota, offered me a place to stay. I thought that was really cool. But I am going with 2 other people, so it might be a little crazy. And, man, you guys put a lot of trust in me. I felt like showing up to one of these houses with, like, no shirt on and, like, a fake tattoo across my whole chest of my wife's face. I just walk in, maybe not take a shower for a couple weeks. Hey, guys, thanks so much. And, their wife came in. I was like, hey, honey, what's for dinner? I just messed with them and stuff like that. I mean, that would have been fantastic. But think about that for a minute. I mean, offering your house to me just by listening to a podcast. I mean, the trust that goes into that is unbelievable. Obviously, I'm just making fun with the shower and saying anything to a spouse because, obviously I respect the hell out of you putting your trust in me, not just for giving you financial advice, right, which filters down to your kids and your families and stuff like that, but really offering your house to me is just that's really, really cool. I mean, I really appreciate it. If I was going by myself and meeting friends there, it would be different, but I am going with my wife and a friend, so that would be a little bit too much. But I just want to say thank you because a lot of people reached out from Minnesota and offered me a place to stay. Since the hotels and everything's booked, it's really, really expensive, but I really, really appreciate it. Now, I have a great interview lined up for you. My Curzio Venture Opportunity subscribers are going to be familiar with this name since some of you got into the private placement a few months ago. The name of the company is Revival Gold. I'm interviewing the CEO, who's a rock star, but he's also very humble, under the radar guy. His name is Hugh, Agro. And by the way, even the private placement, the stock's not trading too much higher. So it's not like, holy cow, you got it for nothing. It's still trading at a fantastic price. He gave me an update on his company at the Vancouver Resource Investment Conference last week. So I thought it'd be great to share some of those details with you because this really is a cool company. Plus, I think gold prices and gold stocks are going to surge in 2018 and 2019. I'm going to provide some amazing stats. When I say statistics, I'm always, people are like, statistics, oh no. No, I'm going to try to make it as interesting as possible. You won't fall asleep, I promise. But I found an indicator that almost predicts exactly where gold is going. It's an indicator that's worked for over 3 decades, and it's finally flashing green, which means gold stocks are likely to go a lot higher, at least over the next 2 years. I share all those details with you. It's very interesting. It's nothing crazy. It's not rocket science, but just something that happens every time this one thing happens, which is going to happen over the next 2 years, and it's been happening and pushing gold prices higher. It's going to be interesting when we look at the data and see how perfect this indicator has been in predicting where gold and even gold stocks are going. Now, before I share that with you, let's get to my interview with Revival Gold CEO, Hugh Agro. Hugh Agro, thanks so much for coming on the Wall Street Unplugged podcast.
Well, thank you for having me, Frank.
So, you have a very interesting background, right? Which dates back, I think it's pretty much over 20 years, I believe, when I look. It's a mining engineer, former executive vice president for Kinross Gold, which is a major gold producer, senior executive place at Dome. But then it gets really interesting because you also have a private equity background where you co-founded a private equity firm. You work for several others, I think I saw, including Deutsche Bank and the investment banking division. How important is it to have that investment banking background as a CEO in the resource sector? Because I see so many CEOs who are geologists, mining experts, but know little about finance and raising cash. And these junior miners, from my experience covering this industry for a long time, usually underperform the market. It's almost like an immediate red flag if they don't have that experience. How important is that you have so much of that experience in private equity?
Well, it is important, and the mining business sometimes loses track of the importance of the business side of mining. And I think if you come from an investment background, you've got both that appreciation of the importance of the shareholders' returns and an understanding of the assets underlying the business. So I'm a mining engineer, but I certainly have a business development bent.
No, that's great stuff, and you're very successful. And I'm not going to put you on the spot here. I'm gonna say everything because I know you're a very modest guy. You've been at this for a very long time. If I had to guess, you probably don't have to work full time in this industry or an executive position, which requires tons of hours. Also, as we know, less time at home with the family. Why are you coming off the sidelines now to start Revival Gold?
Well, you're right. I have had some good success in the gold business. My last role of note was, as I said, Executive Vice President Strategic Development with Kinross Gold during the last gold cycle, where I was involved in taking the company from a market cap of $1.7 billion to $17 billion. I retired in late 2009, but I came back to the business about 3 years ago to assemble a portfolio of assets and build a new mining business. I just saw a great opportunity to do that, and the case for gold is strong.
Now, before we get to Revival Gold, let's go over the case for gold and going higher being strong, because we've seen, for me, it's difficult to tell whether it's inflation, because there's inflation every time when gold didn't do good, low interest rates. You always want to look at the cycle in gold, because let's face it, people say, and so many of the great analysts out there say people are the most important thing, but you could invest in the greatest people in the world and still be down 70%. I think the cycle is the most important thing. Does that have a lot to do with you coming back at this particular time? And why do you think gold's going to go higher over the next few years?
It does, certainly. And you don't like to be fighting against the wind at any time in any business, but in the commodities businesses, it's particularly important. The case for gold is strong. There's a few things around that. We've got toppy equity markets. We've got bond yields on the rise, and the value of the U.S. dollar, of course, has been in decline of late. Against that, gold has done its job of being a store of value and a currency in uncertain times. The metal was up 6%, as you know, in 2016. It was up a further 13% in 2017, and it's up year to date, sitting at about $1,340 an ounce today. The other thing that's going on, and the thing that those of us in the industry are more attuned to, is that the gold miners are running out of gold deposits to mine. Discoveries have declined from about 100 million ounces a year to less than 20 million ounces a year, the rate of discovery. And meanwhile, production has escalated from about 80 million ounces a year to about 100 million ounces a year. So the result is a large gap between the available deposits for mining and the appetite that those gold miners have for deposits to mine.
Now, here's someone who's been in the business for a long time, and my audience, I mean, they love junior miner stocks, but when it gets to the technical, sometimes it's old. Even for me, with geologists and stuff, you have to read things 5 or 6 times. Explain the details or the specifics of, because this is very important to what you're saying, of say the majors want to go out and now they have money to spend. Okay, they have 2 choices. One is to purchase these assets, right, which may be from junior miners who have been drilling these properties. But the other option is finding things on their own from scratch. And could you explain why that's almost an impossibility impossible? Because when you look at it from the start to where you actually find something to actually going through all the permitting development stage and everything to producing, how long does that take to put in perspective how important these reserves and they have to replace them are?
Yeah, the short answer is it can be 20 or 30 years. And so as a business development person in the gold mining business, you're always looking for the opportunity to accelerate that, either through finding projects that sit in good jurisdictions or nearby historically mined areas, or are particularly high grade, or have indications that they can be run through processes that are less onerous to construct and capital intensive to build. So those are the sorts of things one likes to look for. But your bigger question is, why is a junior better poised to fill that gap than a major? And I think the answer is that generally speaking, the majors move less quickly and are less entrepreneurial, and frankly do so at a much higher cost of business. So the cost for a major to find an ounce of gold and put it into operation is expensive relative to what a more nimble junior gold company can do. And that's why you see the real performance in the gold stocks amongst the intermediates and in some cases juniors. And the seniors tend to run into trouble. They run out of ounces to mine, and they wind up overpaying in toppy markets for the projects and the work that companies like ours do.
Once again, we're talking to Hugh Agro, President and CEO of Revival Gold. And let's get to Revival Gold, because for me, I visited dozens of junior miners just at the Vancouver Investment Conference, last week, where, I saw you and we talked to give me a great update in your company. But some of these companies I visited have pretty good projects, good management teams. Their stocks are down a ton off their 2012 highs, may have rebounded a little bit here. So they look like good investments. And they have high insider ownership, at least some of the companies that I saw. So why should an investor, and say, not me or anything, because I know a lot about Revival Gold here, why should they be looking to put money in this space, not just put money in this space who want to at this price, but why should they go to Revival Gold? What's different for your company compared to all the other companies out there?
Well, it's 2 things. It's the projects we have, and it's the people we have. And I'll speak to the projects first. Revival Gold established a position in Idaho, USA, which includes former producing Bear Track Gold project, and encompasses 10,000 acres and 1.5 million ounces of gold in historic resource. Bear Track was closed in 2001 in a sub $300 gold price environment. And at today's gold price, the in situ value of gold in our project land position is $2 billion. So that's a big prize, and our challenge will be, of course, to put that into a mining plan and ultimately extract it. But we have very nice starting point from a project perspective in the company, and we're in the United States, which is a great place to be mining. It's one of the top producing gold countries within the second largest gold producing region in the world. It's a safe place to operate, and the regulatory environment has improved dramatically over the last 12 to 18 months. This is a place where business can be done. The other thing is people, and so our team is really focused on individuals who have done it before. We've just appointed Diane Garrett as chairman of the board. Diane was involved, led as CEO the restart of the Hale project in the Carolinas, which was sold to Oceanus Gold for about $550 million. Wayne Hubert is another director on the board at Revival Gold. Wayne has a long history with the Bear Track project, but then went on to build another company up and sold that to Goldcorp for $3.5 billion. So both of these are CEOs who've done it before. We also have on our board some very strong technical expertise in Don Byrack, who's the former VP Exploration for Coeur d'Alene Mining and lives in Coeur d'Alene, Idaho. And my long-term colleague Ty Burt, who was the former CEO of Kinross Gold and worked with me on that build from $1.7 billion when we arrived at Kinross to a $17 billion company when I retired. So these are people that have done it before, and this is a project that has some great attributes to it, being in Idaho, being at a brownfield site, being relatively high grade, and being one that has a really good starting position for us to build on.
Yeah, and you know what? You got off to a pretty good start, too, right? I mean, you had pretty good drilling results. I think it was earlier, not even earlier, but a couple of weeks ago. Could you talk about that a little bit? Because this company, I want people to realize, is it's basically just put together. It's not that old, but you got everything in place, management team in place, you have the asset in place, and so much has happened. But you guys just reported pretty good drilling results, which is kind of exciting. I know that's something that we talked about at the conference. Could you talk a little bit more? And I'm going to remind you that when we look at drilling results, especially my audience, they love to invest in stocks, but sometimes it gets a little technical. So even explain it, because they're very good drilling results if people understand exactly what the numbers mean.
Sure. We did 3,000 meters of drilling in 2017, and as you point out, we just released the final results from that drilling. The nut of it is that we intersected some significant grades. In some cases, double the historic resource grade at Bear Track. 3.5 grams per ton over 65 meters, 1.9 grams per ton over 65 meters, 2.8 grams per ton over 54 meters, and all of these close to surface. That is to say that the extraction of any mineral deposit we put together from these drill holes will be a lot easier, a lot closer to surface, a lot less costly to extract. So these are significant results, and as I say, in some cases double the historically mined grade at Bear Track. And you're right. We were recognized as a top-performing junior gold stock last year by INN. In fact, I think it was the second or third highest performance on the stock exchange, the junior stock exchange in Toronto, Canada. And even despite that, our market cap today is only $30 million. We've got $7.6 million of cash. And we're backed by Orion Mine Finance, which is a plus $4 billion private equity firm based in New York City. So we have a lot going for us in terms of the team, the project, our capital structure with only 41 million shares outstanding. And in terms of an outlook, we've got lots of catalysts in front of us. We're back in drilling this year with another 10,000 meters at Bear Track and Arnett Creek. We have a resource update coming together. And we're also on the lookout for other projects and opportunities to build on our portfolio.
Yeah, and you can tell you're a pro at this because just going over the catalyst where some of the companies I talk in the junior mining space, especially from executives that or CEOs who don't have a lot of experience, that's their first project, that was going to be one of the last questions I ask where, what are some of the catalysts to look for? Because even say if, the market And it's interesting that gold prices are moving higher over the past couple of years, but we're not seeing that huge movement in a lot of gold stock yet. But I think having those catalysts is so important instead of waiting 6 months, 9 months or something to happen. And it's great that you understand that as well from a shareholder point of view. But I will say that when I look at Revival, you're fully funded, great balance sheet, you have a great project, great jurisdiction. But what's most important to me when I look at these stocks and talk to my audience here is insider ownership to make sure that you guys have stake in the game. You guys own a lot of your stock. I think I saw it's close to 14%, which is very high. So your team has stake in the game, meaning you guys are going to benefit the most if the stock goes higher. That's the incentive here. What is the actual goal of this company? Are you looking to develop this because these were it's a past producing mine that you have? Are you looking to develop this, or is it to the point where hey, we're drilling, the results are great, and the majors are dying for fucking reserves right now, right? So is it like a definitely looking to sell the company, or hey, we may even develop this because this could be even bigger?
We want to build a gold producer that returns cash to shareholders, and we know that this is a 2 to 10 year exercise of building out the company. We have as I said earlier, a great start with Bear Track and Arnett Creek, the neighboring land position in Idaho. We've got a clear path forward there where we've got drilling, resource update all coming this year. And then we'll move towards understanding potential exploitation opportunities and resource expansion. So that's on a track, and we'd like to take that through to production, either as a restart of the oxide heap leach and or a sulfide component. And I meant to mention, we've got 5 kilometers of strike length of mineralization at Bear Track, and we've got some very high grade intercepts beneath the historic resource, and we want to follow those up. So there's lots to be done there in terms of taking that forward, and ultimately we'd like to bring it back into operation. The community of Salmon, which is about 11 miles from the site, is supportive of our efforts at Bear Track. It's a ranching and mining community, and we'd like to bring back an operation to that community. But longer term, we would like to be building out a 2 or possibly 3 asset portfolio of gold producing projects, and deliver a return of cash and leverage to gold to our shareholders. And as I say, for me, that's a 2 to 10 year exercise advancing this business and building it out. It's a long-term game plan that we have, and one that we've seen work before and we've made work before. So we want to do it again.
Yeah, and Hugh and I respect that a lot, because if I had to guess, guys, if I basically asked 100 CEOs, junior miner companies, of what the goals here, I would think that over 90% of them would say just to basically build it up and drill a little bit more in our hopes to sell the asset to somebody. But the fact that you've been there, you've done that, which is very rare, right, Hugh? I mean, taking a mine from early stage to production, the fact that you're looking to produce this, it's just how do I say it? It's really a great feeling, right? Because it's not, hey, we're just going to keep drilling. If you have that methodology, right? If you're looking, say like, all right, I'm going to just continue to drill and try to, increase this asset, and you're just sitting there until the cycle turns, but you're not really looking for it where you're looking to develop this. So for me, from that perspective, it's just really cool from someone who covers that industry that you're like, no, we're not looking to sell this. We're actually looking to develop it. And I don't know if you would agree with that or not, but it seems like most junior miners are not looking to develop. They're just looking to build that project up and sell it to a major.
Yeah, well, it's a hard road to hoe, right? So not a lot of folks working in the discovery business are familiar or comfortable with the development business, and we're comfortable in both areas. And we know that ultimately, you can't rely on the gold price going up or down to drive your business. You have to run a good operation, and you have to run a good business and deliver cash back to shareholders. So we'll hope and expect to see the gold price move up over the years, but we're not going to wait for that. We're going to build out an asset portfolio that can return cash to shareholders, and that's our ambition.
Yeah, it's great stuff. Well, Hugh, listen, thank you so much for coming on the podcast. I know you travel a lot, you're on the road a lot, and you're taking the time to introduce this company to a large part of my file and listeners and stuff like that. So I really appreciate you coming on, bud.
Thank you, Frank, for having me. I look forward to getting back on the program and updating you as we make progress.
That sounds great. Hey guys, great stuff from Hugh. Hey, he's a humble guy. When you look at him, he kind of reminds me of like a Rob McEwen type that you don't know. But I mean, just aggressive as could be, right? He's just someone who's been super successful, but you would never know it, right? He's not one of those guys that pounds his chest and say, "Hey, look what I did," things like that. And I really like people like that, especially in the mining industry because it's so competitive. There's a lot of egos. And think about some of the things he said. Frank, I want to come back on and give you guys an update. I'm looking to turn this into a producing asset, right? So he's not focused on just selling it, which, let's be honest, guys. That model has crushed so many juniors. And that's fine, right? I mean, there's a lot of young people in this industry that haven't really developed an asset, and it takes 10, 15 years, as Hugh said, actually, before you actually produce, sometimes 20 years. And I get it. So you just, you know where the majors are. You know that they underinvested. All right, that's out there. Everybody knows that. They know they have to purchase properties. But you know what? They thought this would happen 2 years ago. So as a junior, you're trying to build up an asset. What does that mean? You're not generating revenue. You're not generating earnings. Yeah, you're hoping that someone comes along and sells it. But the guys that come along and buy this asset, they're not looking to buy anything because they're so leveraged and they're not in good shape. So you're just sitting there going like, wow, what do I do? So Rival Gold, that's not a problem because he's not saying, oh, well, I'm developing this so I could sell it. No, he's like, I don't care. If these guys, he's going to sell it for the right offer. He's going to do it to the best interest of shareholders, right? But he's looking to develop this. And you know what? He will develop it. And I know he will because he's did it in the past. And this was a past producing asset. So a lot of the infrastructure is already in place. If you're looking at Revival, it has a small market cap. If you like it, scale into the stock. You buy a small position. Because if things go wrong when you have a market cap, you don't have a lot of volume, it's difficult to get out of a big position, especially when a stock is falling like a rock. So just be careful. And full disclosure, I don't own any shares personally. I love this company. That's why I recommended it, the private placement to my subscribers. I want to know conflict of interest. So look, if you like the name, you like Hugh, feel free to buy it. If not, that's perfectly fine. I'm always sharing tons of ideas on this podcast. It may be, some of those may be a better fit for you, where this company might be too aggressive for you. That's fine. But after talking to Hugh, him giving me an update, he's always sending me emails, giving me updates. He's a credible guy, and that's my job, to put credible guys who really work hard to have the chance to make you a lot of money in front of you. Could it work out? Well, I talked to Garth Braun, right? So we know that Blackbird Energy, he came on. He's coming on next, and he's contacted me several times to come back on. So he's not a guy that's running away with. That's a stock I really loved. That stock has come down. They had some problems, but he's like, I need to come back on. I need to give you subscribers an update. So, and I know a lot of you would ask for that. So he's going to come on and let stocks down. But those are the guys that you really want. Yes, look, these are junior miners. They're very risky. You want to back the right guys. But it's important for me when things don't go right, these guys come back on. And Garth actually looked for me at this conference to tell me, hey, Frank, I need to come back to you on your podcast to talk to your subscribers. And I like that. Yeah, that shows respect. That shows credibility to me. And again, not every stock you guys investing in the junior miner stock or small biotechs, you have to realize not everything's going to work out. These are risky stocks. And when it does, you want to make sure that return is huge because you're taking on a lot of risk. And you don't want to buy a small cap stock like this or a junior miner that doesn't generate any revenue to generate triple digit return, 100% returns. It's 300 to 500% plus, or hey, here's my stop and I could lose 35 to 50%. That's a good risk reward. That's not for everybody, though. There's people out there that are retirees that say, hey, you know what? I just want some good names. Give me some pretty good stock, large cap stocks. That's fine. But if you're an aggressive investor, just keep that in mind. Make sure that reward is worth the risk that you're taking, because the more risk you take, the more chance you're going to lose more money on the stock, and you have to be prepared for those. That's why you want to invest in a lot of these. I wish I had one stock that I knew that was just going to go up, like Northern Dynasty, which has come down. I'm going to answer a question about that on Friday's podcast, frankly speaking. More APA stuff. It's not as big as the deals people are making out to be, but it does provide uncertainty, and now that stock's falling again. But, a company like that's gone up 900% before all of this, I would love to say, hey, guys, buy it right here at 35 cents and sell it at $3, and that's the only stock I recommend, and we all go out partying on our own island. Never happens that way. Okay, that's why I want to invest in a lot of these, because as you see with Northern Dynasty, even though things went fantastic, look how much the stock has come down. So you want to be smart, scale into these positions, take some profits when they do work out, let the rest of your money ride, right? You should be in Northern Dynasty, you should be up a ton where even if the stock goes to zero, you're not going to lose any money. If you follow my advice and sold half at $2 when you bought it at 35, 40 cents. Okay. Is it frustrating, this whole position? Yeah. What's going on right now? It's frustrating, but it's nice to have so much money that you made on the stock because you invested the right way. That's how you want to invest in this sector. You want to get too much into that. But I do like Hugh. If you're into Revival, if you like it, take a look, do your own research. They have a great website and stuff like that. And, again, make sure you do your homework as well. If you have any questions, I'm sure you could probably send them directly to Hugh and he'll answer them. So let me know what you thought of that interview, Frank, at CurzioResearch.com. Now, let's get to my educational segment. So I wanted to give you an update, some of the things I found interesting at the Vancouver Resource Investment Conference, which was last week, and also explain why I think gold prices and gold stocks, especially junior miners, are really going to surge over the next 18 months. So in Vancouver, one of the strangest conferences I've ever been at, because it's a resource investing conference. I keep saying Congress because it's Value Investing Congress, which is a big conference with hedge fund managers. I attend New York. But when you look at this conference, it was a surprise to me. There wasn't a lot of interest in gold. Everything was cryptocurrencies. A big focus. Two of my speeches were on cryptocurrencies. It was standing room only. So we plan on launching one newsletter. Barry Cohen, I talked to you about. It's on a podcast a couple weeks ago. Not only that, I'm coming out with a great issue for Curzio Research Advisory. Our next issue is going to be cryptocurrency focused. I already gave you one pick on that, which is up and doing well. But there's 3 more picks that I like right now. One is super aggressive. One is pretty conservative. And the other one is an unknown name that you're going to be surprised I recommend that has huge exposure to this industry in a safe way. So risk reward and fantastic names. That's coming out for Curzio Research Advisory subscribers with a whole bunch of education stuff. It's going to be really cool. But man, what a big focus there. And no one was really talking about gold. Uranium had a pretty big focus, which is cool. Surprising. A lot of people listen to uranium. They're very interested, especially institutional money. I know that Sprott's now getting into like another cryptocurrency thing that's backed by miners and everything that's out there. And so even you get the big firms getting into cryptocurrencies and you say, well, it's coming down and stuff like that. And regulation, remember, as Barry said, regulation is going to be good. It's going to, prices are going to come down. You're going to weed out all the garbage that's there. That's what you need. But like Gary said, once you have regulation in this industry, it becomes legit. Now the government's going to be receiving tax dollars off it, just like the marijuana industry. So that almost puts a name on that stamp on it saying, hey, this industry is for real. Even the Fed's talking about it, having a back coin and stuff like that, but ICO and things like that, which is pretty crazy. Guys who from the Fed and Fed presidents that were joking about it 6 months ago are kind of like serious about it. So let's see if they actually mention this in the Fed meetings going forward. And how serious could that be? Amazon might be getting into this as well. You're hearing a lot of things out there in the cryptocurrency market. South Korea, they didn't ban it. They're regulating it this way. They can track people. They want you to put your real email address, your real phone number. This way, they could track your profits and track exactly what you're doing. And when you do that, that's going to avoid all the hackers from hacking this stuff because there's no risk to them because it's not regulated. They can steal whatever they want, and if they do, what do? Well, you can't go to any authority because nobody regulates it. 99% of the hackers are hired, right? I mean, it makes no sense to hack things and make $100,000, $200,000 when you can go to J.P. Morgan and they'll pay you $2 million. And all these banks and companies, they all hire the best hackers. And they make a fortune now. But when you could go into an industry where you could steal money and not get caught, why wouldn't you do that? And we're not talking about blockchain, which is hard, very difficult to hack, but just the accounts, the wallets, and things like that. You're seeing these massive hacks of tens, hundreds of millions of dollars, overseas especially. That's where most of the trading is taking place, believe it or not. This is not even a U.S. story yet. People are talking about it. Most people are not invested in cryptocurrencies. What's good is that we're becoming one of the leading authorities there on cryptocurrencies, where we have companies coming up to us. I went to go visit a company, which was a 6-hour drive in a snowstorm. If you look at Curzio Research page on Facebook, you'll see the pictures and stuff. It's really cool. The work I do for you guys, because I love you. Try to provide these great investment ideas, but saw a data mining facility up close. I couldn't take any pictures of it, obviously, but just to see how this massive structure works, how it filters into the computers, and how it generates Bitcoin. I mean, the technology, the electricity costs. I mean, I got to see that up front from an analyst. That's amazing because now I understand it. I see it. I can analyze the costs, and I know who's fully what and who's not. And there was 1 or 2 companies that were full of it. They were looking to raise money. But they're coming to us, which is going to provide a lot of great ideas, especially if you're a Curzio Venture Opportunity subscriber, for private placements and crypto deals, which is great. because of the credibility we have and the circles that we're in. And it's, it takes a long time to build that. And we've done that. We're trying to do that in crypto as well, where it's not, hey, let's just generate names and go crazy and send everything. And we've seen like the Facebook, right? The Facebook thing where they're shutting down some of these crazy ads and everything. And I'm sure it's top story on Tuesday and Wednesday. But you want to have a leading authority in there. Someone that's saying, hey, we talked to the big guys. This is what's happened. Here's who you could trust. And that's why I went out and hired the best person, the best analyst in the entire industry. And I can't wait to launch that newsletter. Hopefully we're going to launch it in a month. There's a lot of work that goes behind it, a lot of marketing and stuff like that, and a lot of writing. We want to make sure we have educational pieces and stuff. So it's not just, hey, here's the newsletter, pay for it. We want to make sure that we're delivering on our promises, that once you come in as a new subscriber to that, you're learning, you know exactly where to go. We're going to have educational videos for you. So that's why it takes so long. I'm more about providing the best experience possible for you, because the sale is just the beginning for us. I mean, a lot of people, the sale is the end. You sold them, that's it, okay, here, and you get in, you're like, wow, this isn't what I wanted. For us, it's, no, we're going to give you more than you expected. We're going to try to answer all of your questions. We're going to send this out to people and see what they think and say, and they're going to ask questions. So this way we know the feedback. That's why I love the feedback that you guys give me at frankcurzioresearch.com. And it's critical sometimes, and it's cool, but you guys care about the brand, and you're like, Frank, hey, something about the webpage, or hey, Frank, this could be better. I mean, that makes our company better because we're listening to our customers. Okay, so those are great emails, and we welcome them. Yeah, you got to have thick skin sometimes. And some of the emails are like, hey, Frank, Northern Dynasty, could you give me an update? And I'll look, and that happened to be a free pick on my podcast, guys. It's a free pick on my podcast, and it was a free pick because I was in between, starting my own company. I just left the previous company, and this guy's not even a subscriber, and say, Frank, I need an update. You need an update for, I'll go to your house, hang out, put your feet up. I'll serve you a cup of tea, hang out and everything, That's all right. I'll give you free investment advice. Sometimes you got to, put some of those people in their place, but overall, send the feedback. This is what we want, but this news is going to be perfect. I want to make sure it answers all your questions, and that's why sometimes it takes long to really launch these products, because I really give a what when you do subscribe, and that's what we're doing. We're building the whole platform, making sure everyone's going to be comfortable. They know how to trade cryptocurrencies. They know where to go. We're going to answer all your questions, and it's coming out pretty soon, so it's really, really exciting. But one of the biggest things here, guys, not to go on this, is as a contrarian investor, I love crypto. I love this pullback. I think blockchain's a long-term trend. I think Bitcoin's a great, pretty much coming into a pretty good buying opportunity. It's probably going to go a little bit lower. The trend is definitely for real, as you know. However, the fact that nobody liked gold at all. I mean, you can't raise money in gold at all unless you give away free 5-year warrants, compared to, I joked around on a Curzio Facebook live video. This was yesterday, saying if I start a Curzio coin and I announce it on stage, by the time I got off stage to walk out of the place, I could raise $15 million. I'm not kidding. Raising money for crypto anything is simple. It's easy because people see huge returns. Yet the gold industry, nobody cares. I mean, there's so much hate, and everyone's like, that's one of the reasons as a contrarian investor, I love it. But more important, and this is going into my educational segment here, is I wanted to talk about the reasons why gold's going to go screaming higher over the next 2 years. And it has to do a lot with rising interest rates. So if you look throughout history, one of the biggest drivers of gold prices is rising short-term interest rates. So short-term interest rates are basically controlled by the Fed, right? It's called the Fed funds rate. They're going to actually raise this rate over the next few years. At least that's what they're saying. 3 times this year and probably 3 times next year, which would get them to a more normal rate historically of around 3%. That may seem high right now because we're used to having 0%, but being at 1.5. And, we've seen gold prices rise. Now, if you're a gold bug out there, you're like, Frank, you're out of your mind. It doesn't make sense. And I hear this all the time because I listen to these gold bugs because it's a religion to them. They don't care about stats. They don't care about statistics. A lot of them libertarians are just like, no government, gold's, you can't be so like it's a religion where it's like Scientology or, whatever you believe in, where you're not willing to hear the other side. If you're like that, you'll never be a great investor, ever. Okay. You have to be willing to listen to the other side. So for me, I've always listened to gold bugs, did a ton of research and said, wow, this doesn't make sense. Because if you think what I'm saying here, interest rates going higher, why the hell would anyone own gold, right? Gold is a store of value, doesn't pay any interest. That means if interest rates rise, money should flow out of gold and into interest-generating assets, right? That makes sense. That's logic. Oddly enough, that's not the case. If you look at 1973, 74, and I did a ton of research on this, the Federal Reserve began to aggressively raise short-term rates from 5% to 12%. Think about that, how the 70s and 80s. Pretty crazy. The Fed funds rate, 5% to 12%, right? We were just basically at zero not too long ago for, 8 straight years. Over that same time frame, when they're aggressively raising short-term rates, gold went up 300% in 2 years. What happened in 1975? They're like, whoa, we need to lower rates. They started lowering rates from like 13%, it hit a peak, to 7.5%. I know, it sounds crazy, those numbers, right? When you look at today. Gold prices crashed. They fell 25% that year. If you look at 1977, 1980, Fed began raising interest rates again. Needed to control inflation. Inflation was 4.9% in early 1977, right? We can't even get to 2% today. By 1980, it surged to 12.5% inflation, right? So they're raising rates, and you think, wow, people should be leaving gold. Over that 4-year period, gold prices surged from 160 to 590 an ounce. It's over 250%. In 2003, again, did a lot of research on this. Follow me here. Yes, I'm bringing up statistics, but for me to support this and tell you something that no one else is really telling you, because higher interest rates are supposed to be negative for gold, I have to provide the evidence. I'm going to look like an idiot. So just listen to me. Not too much stats here, I promise. I don't want to bore you. But you go in 2003, Fed funds rate hit a low of 1%. The Fed started to raise rates gradually over the next couple of years. So by September 2007, the Fed funds rate hit 4.5%. By no surprise, the price of gold just started steadily marching higher from 2003 through 2007. Went from 417 an ounce to 840 an ounce. 100% returns. The Fed was raising rates. Now, if you're really into gold and stuff like that, and you follow me along here, you're like, Frank, what about 2009, right? Because the Fed pushed short-term rates down to 0.25%, right? It's the lowest rate in our country's history. This was supposed to inflate the hell out of the economy over the next few years. And once that happened, the Fed would say, you know what, we're going to aggressively raise rates to the years ahead, to control that inflation, probably more to historical average, around 3%. So everyone was expecting them to raise rates aggressively, right? There's not a person in the world that didn't think we were going to see massive inflation by the end of 2010 when we saw that all this crazy crap that the Fed was doing, bailing out everyone, putting money in everything, it was all working. They made money on almost everything they put money in. Almost everything. And Fannie and Freddie, they're still making a killing. AIG made a killing. All the banks with infusions, all those warrants, they made a killing, right? Which makes you think if a company, someone's saying that GE could go to zero, is a horrible freaking analyst, because you have to factor in that the effects that GE would have if that stock ever went to zero, the amount of employees, the fact that Boeing would not even exist, because who are they going to get their engines from? So many companies that impact that. What do you think the government's going to do if that stock fell to the point where they could claim bankruptcy, or it fell to 5 or 4, which is some crazy prediction of that? What do you think the Fed's going to do? What do you think they're going to? It's crazy. Now the Fed, what do you think they're going to bail them out? Because they made so much money last time. Do I like that? Do I hate that? Yes, I hate it. They should let them fail. But they won't. So as an analyst, for you to say that GE is going to zero, it's terrible. It means you're a really crappy analyst. Because you have to factor in that and that's what happened, right, with our government. If you look at all the people that shorted the housing market, the scariest thing was them making money, covering their shorts, because the government, they couldn't even cover their shorts if the whole entire market collapsed, which means they wouldn't have made money. But once the government bailed them out, even the smart people, and even some of those guys who took short positions, started betting on the banks because they were basically too big to fail. And the government was saying, hey, all these small companies, all of them that failed in the banking industry, you're taking their assets. We're going to backstop these assets. Here you go, JP Morgan. Here you go, Wells Fargo. Here you go, Citigroup. We're going to backstop all this stuff. And look at Navient. Holy cow. Take every single student loan you want, and we got you back. So what did they do? They went out and bought every single student loan they could possibly buy because they knew they were backstopped by the government. They made a fortune off of it. You have to factor a lot of this stuff in. So when 2009, the Fed pushed down short-term rates, everyone was like, oh, my God, this is crazy. And they started inflating the market. People thought, everybody did. There's not a person think, wow, in 2010, this is really working. In 2011, wow, holy cow. Now the Fed has to aggressively raise rates. But you know what? Over that time from 2009 to 2012, gold prices surged. Why? Because they were anticipating that we're going to see rising interest rates. And we didn't. The Fed's plan completely backfired to the point where, hey, this is going to work out where we're going to see tons of inflation. Well, we never saw inflation. Nobody knows why. It's hard to predict. And when I say inflation, I mean the indicator that the Fed uses, right? That's what you got to focus on. I don't care. You can say, well, look at tuition costs and look at healthcare costs. Well, you can look at technology has come down. You can look at oil prices, which are averaging over 90, came all the way down. I mean, I'm just talking about the CPI. I know food prices up. You can pick certain things. Again, you could argue there's deflation and inflation depending on which economist you talk to. It doesn't matter. You have to look at what the Fed looks at. And the Fed looks at the CPI, and the CPI was showing no inflation. So what happened? In 2012, the Fed basically said, you know what? We're not in a hurry to raise short-term rates at all. We don't even care. We're going to keep them low for a long period. That's when gold prices crashed because they basically said, look, we're not raising interest rates. So in 2009, 10, 11, especially 2010, 11, and 12, when you saw gold prices going higher, that was an anticipation that, hey, you know what? The Fed's definitely going to raise interest rates. When they came out in 2012 and 11 and said, you know what? We don't really need to raise interest rates right now. They stayed at historical low levels. I mean, what was it, for 8 straight years? I mean, how insane is that? How insane is that? I mean, they should have started raising rates easily in 2011 and 12. So when they said they're basically not going to, gold prices crashed. We go from close to 1,900 or whatever the top was, over 1,800. I don't know the exact amount, 19 and change, I believe, to under 1,100. I mean, it's looking at a 40% decline from 2012 to 2016, right? Horrible market for gold. But then what happened? And this is, guys, I know there's a lot of stats I'm throwing at you. Please listen to this, especially if you're a gold investor. It's very important. Rewind it 10 times. Trust me. I'm saying something that's going to make you money or try to make you money. What happened December 2016? The Fed made a major announcement. They said, hey, we're going to raise the Fed funds rate. And that was for the first time in 10 years, right? Since 2006, they're raising rates. Look at the charts and look at the date. It happens to be the same exact date gold prices bottomed. I said earlier it was below 1,100. It was around 1,130 when it bottomed. Look at the charts. Look at December when the Fed announced they were raising rates. Right? They raised rates for the first time and said, look, we're going to gradually raise rates going forward. What happened to gold? Almost to the day it bottomed. And if you look at gold prices through 2017, they had a pretty good year. And you look at much higher, 2018, they're even up over the first month. But they've been gradually going higher as the Fed raised interest rates. As soon as the day they announced it, look at the chart, guys. It's amazing. Right? To that day, you're seeing gold prices go higher. Now, why is that good news for people want to invest in gold? Well, the Fed plans on raising rates several times this year and several times next year. So they reach more normal levels, which I peg around 3%. Maybe it's 2.5%. But 3% is close to the average over the past few decades. I mean, minus the 1980s, which was a little crazy, and late 70s. That's much higher than the current rate of 1.5%, I think it is. So the market is anticipating at least 3 more 25%. They basically have been doing quarter point increments when they meet every few months. They expect at least 3 more rate hikes in 2018 and more in 2019. So if that holds true, gold prices are going to surge. And you're seeing some pockets of the market do good. You're seeing some producers come back. You're seeing royalty companies really do well. But the junior gold miners usually lag. Now, why do you want to buy the juniors? Real quick here, guys. I know it's a little long. You want to buy the juniors who have great high-grade gold projects because you're looking at companies that have to replace their reserves. And the massive decline, if you look at large cap producers, their gold reserves and production, it's falling like a rock. In 2016, the production growth fell 6%. 2017, it fell 11%. In 2018, 19, and 20 is expected to fall by an average of 17%. Why? Because they weren't investing in projects. They were deleveraging themselves over the past 5 years because these idiots decided to buy projects on borders where 2 countries hate each other, where you need $1,900 gold prices for these things to be economical. That's what you do. You become an idiot in a bull market. It happens to everybody. When your company's growing, you just do stupid things. They did a lot of stupid things that had to leverage themselves. Now they need to purchase assets. What did Hugh say? It takes like 20 years to actually start from scratch. You're not going to start from scratch. You're going to buy the junior miners who have these great projects. That's why I just recommended 2 of those companies, Curzio Venture Opportunity subscribers. You're getting that report today. High-grade gold projects, great management teams, huge insider ownership. It's stocks that have gotten crushed and names that are severely depressed because it's in a terrible market. But more important with these projects, they can be scaled. What does that mean? They could be expanded upon, where you don't have to build even more infrastructure. So you're basically scaling these projects. You could build them into bigger projects. So you're not buying, okay, this is 1.3 million ounce high grade gold. That's it. No, they could be 5, 10, 20 million as they scale out these massive projects. Look at Barrick. Look what they're doing in Nevada and how big these projects are. They keep expanding and expanding. These two companies have those type of projects. High grade gold, very important. High grade, what does that mean? Think of a diamond. A 1 carat diamond costs anywhere from $1,000 to $100,000, depending on grade. So you want higher grade is definitely much more easier. You get more money for it. It's much better. That's what they want. And there's a lot of juniors, not a lot, but a good dozen or so with these types of projects. And the majors now have better balance sheets. Their stocks have gone up, so they can use their stocks as currency. And they're going to have no choice but to purchase these guys. So you have the backdrop for gold. It looks like it's going to go higher if the Fed continues to raise rates. Just provide a good example. I didn't take 1 or 2 data points. I'm not cherry picking. I provided you about 6, 7 of them. I know it was a little boring, but I do have a lot of gold bugs listening to this, and you want to make sure that when you say something that you have the data to prove it. That's what we have to do as analysts. But if you're looking at this industry, I think gold prices are going to go higher. Thus far, junior miners have lagged the market. However, there's a lot of good names. 2 of them I just recommended that actually just started to get into uptrend. Right? So just the hated companies that are finally in an uptrend and really good balance sheets, really good management teams. So that's the formula. That's what you want to look at. I think gold's going to have an amazing year, especially the fact that I just went to one of the largest resource investment conferences and nobody cared about gold. Nobody cared about gold. That's something you like to see as an investor. Okay, guys, be sure to check out my Curzio Research Facebook page. Did post a few live videos past few days. There was a 10-day stretch where I couldn't do live videos, and especially I was in Vancouver at the Vancouver conference where they had terrible Wi-Fi. I mean, 8,000 people signed up to this thing, 250 companies, but, you can't pay a few $100 to get the Wi-Fi to work good where you could do a live video. So it was a little frustrating. But I did post a lot of stuff from the conference, including a couple pictures from me on the road in the snowstorm and stuff like that, and it was really cool. But I get a lot of Facebook thing's really taken off. I get the most common feedback when I do live videos, including one girl that just hates me. I mean, like almost every post. She's like, Curzio, you suck. Your pics are terrible. I don't like you. And I don't want to block her because it's actually entertaining. And look, after 20 years of doing this, I mean, there's one absolute certainty. No matter what you do for people, help them out, provide great stock picks for them, go the extra mile, answer emails, posting stuff when I'm on the road or at conferences, which costs thousands of dollars to attend these things and stuff. And you're posting a lot of this stuff for free. No matter what, some people are just not going to like you. And you know what? That's pretty cool. Feel free to take your anger out on me. It's just too much anger out there in the U.S. and crazy in America and stuff like that. So anything to make people feel better, it's cool. But I just find it entertaining. But anyway, getting a lot of feedback, trying to be more interactive on Facebook, trying to post a lot more stuff and live videos. And this way you see the real backdrop here of what we do in our research, which is really cool. So if you get a chance, go check out the Curzio Research Facebook page. And again, it's not just live videos of me analyzing stocks and ranting and stuff like that, but free content like our weekly breakdown where we take the best stock stories of the week and package them into one page with links and stuff, and posting my podcast with links to our homepage where you can read the transcripts. So really, really good stuff, and mostly all of this is for free. So if you want to check that out, Curzio Research Facebook page, feel free to do so. So guys, that's it for me. Thanks so much for listening. Be sure to listen to Friday's podcast. Well, I'll give you the guaranteed trade for the Super Bowl. I might say guaranteed. Make sure you guys do the opposite. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.